Okay, so just a very quick market update for those wondering what on earth is going on. If you're following me on Twitter, you would have seen some of my updates, and if you're one of my members, you'll be getting my daily report, which I've just sent out right now. Today's been quite an interesting day in the markets. I've got the whole spread in front of me, not all of it, but most of these currencies, and I'm in almost all of these, in fact. So let's go through them very quickly. This is literally going to be just a 10-minute update. This is the Nasdaq. Yesterday we had the CPI news. The price fell dramatically down to this bottom area here where I got in, and I bought right at the bottom. Actually, I was very lucky and managed to get in there. We bounced back up. Today we fell all the way back down again, and now we're back up here. Do I know what's going to happen tomorrow? No, but it is Free Fall Friday tomorrow, so I expect that we need to be very cautious about the positions that we're in the Nasdaq. My strategy is to wait for a rally up to these lines here. I'm in long right now, but I'm actually in a longer term position, generally buying for a recovery in this market. But for my shorter term trading, I've got my stop loss just beneath these spikes below here yesterday, just around about 11,400. And if we dip down to these levels, I'll start adding to my longer term position. But more importantly, for the short-term trades, if this one manages to hold tomorrow, remember it is Friday, it's Free Fall Friday, but we're hoping that the end of the week will bring a positive week, because kind of that's what we need in this market. Having had 3 down days, today's an inside day. It's not really a positive day, and in order to finish this week on a positive note, the market will be looking, the bulls at least will be looking for this market to rally up through this resistance level at around 12,200 odd to perhaps 12,500 and maybe even 12,900. This is the major resistance right up here, of course. So that's my strategy for the Nasdaq. So really, after quite a dramatic fall yesterday with the CPI news, the inflation rate coming at 9.1, we did fall down. The market very surprisingly held on that pretty bad news, and I thought today perhaps we'd fall down on that realization that the news was terrible. 9.1%, highest in 40 years. So, but the market's managed to hold up, and it's held up today. So probably, I'm saying probably, and I really don't know, but probably we'll start to attack the resistance lines above us. First of all, this moving average. This is the 50-day moving average, and then we'll move up to here, and then eventually, perhaps next week, up to this high at about 12,900 before I'll be looking to sell quite vigorously now. Gold. Well, this was a pretty good trade, really. It just didn't get quite as low as 1,685. That's where my bigger, longer term, my most important buy position is in place. But I've been buying at these current levels. Ideally, we'll drop down to 1685 so I can get long with a bigger position. But if we don't, so be it. I'll just stick with the little bits that I've got, and we'll look for gold to rally back up to this traffic well above our heads, which is the 20-period moving average, the 50-period moving average, the 200 and the 100, and of course this trend line and various fib resistance levels above us. So there's a lot of traffic above. I think if we do get up there, we'll have to wait and see, but perhaps gold will be short for another leg down after that. But for now, looking to buy, and quite aggressively at the 1685 level if we get there, but I don't know if we will. Euro yen, well, this one, I've had some good trades on this. So I'm not in the market on this one right now. I know quite a lot of you are trading the euro yen. So my strategy is I was short, got out of those shorts for a reasonable profit. Not a great profit because I'm in quite a lot of the other currencies, but I was willing to take a smallish trade on this currency. And we dropped down to this level here where the support is. I got out there. We rallied back up. I was actually short again today, but I didn't hold on to that position because we bounced around quite a lot. It was in a range between these two green lines. So my strategy now is to sell at any one of these fib levels. They all fall into line with moving averages and so on. If you look on the 4-hour chart quickly, remember, this is the day chart. So we're looking at the euro yen 4-hour chart. We've got the same levels up there, same fib levels drawn on. There's couple of moving averages at the 50% fib. That's an interesting one, and then higher up at these higher fibs. And if we put on even a 1 hour chart, I think those the fibs are beneath that. So the moving averages on the 1 hour chart are actually beneath us, which is bullish. So I wouldn't be selling into this right now. Wait for some moves that back up into these fib levels. You can see we've managed to break up through all 4 of these moving averages. So it's pretty bullish. So it's not time to be selling euro yen right now, but perhaps at higher levels, as I said, and go back to the day chart. And there the levels are on there for you to see. So you can have a look at that. Slow the video down. I'm not going to waste too much time talking about those levels. But they're at about 140.5, I think, and 141.5. The 2 key levels, these ones here. And then the 78.6% fib at 142.5. That's also an interesting one. So any of those, 140.5, 41.5, 42.5, look to sell into those areas. If not, if we do drop here, which I don't think we're going to, but if we do, then we'll be looking to buy low down on that. Euro yen, that's the euro yen. Euro US dollar, quite an impressive bounce, actually. We got down through this parity level earlier today. So that was yesterday. Even on the CPI news, the euro held up really well. In fact, rallied. Actually ended up a bullish day for the euro yesterday, which is very surprising. And then today, I knew we had to test this parity level. I knew we had to spike down. I've been warning people and traders and my members that we were probably going to get. It was too tempting, too much of too much of a delicious level to try and break. And what happened was actually we got a spike down through there, and quite a nice spike down to about 99.50 or so, 99.60. And then a rally back up again, and we're holding above that parity level, only just. Not very convincing, not 100% convincing, but we do have a 1 up, 1 down candle. That's a classic reversal pattern. Here, there's the 1 up, 1 down, classic reversal, so it looks good for now. And we'll have to wait and see what happens. So I'm long on that from down at the bottom there somewhere. Can't remember exactly what the price it was, but pound, again, very similar to the euro, not quite as impressive. We had the 2 reversal candles the previous days on Wednesday and Tuesday, but we did fall back through those support levels. We got down as far as 1750 before bouncing back up to 1850. I think we actually bounced 100 pips after that drop. So I got in at 1800 again. I'm already long from 1900, so I got in. So this is kind of a very small long-term position. When I say small, I have a low leverage on this position because I'm aiming for quite a big profit, and I don't want to risk too much on the downside. So I'm easing into this trade. So I've got 2 trades on, one at 1.18, one at 1.19, and so an average price of 1850, which is about where we are at the moment right now. So if we can get this to hold into tomorrow, tomorrow's going to be pretty crucial because we really want to see this week ending up with a bit of a reversal. And we'll talk about the dollar index shortly, but it's going to be very interesting. So we want to see that hold tomorrow. Tomorrow, I think, is a really key day, technically, and also because of various other factors. We'll come to, actually, while we're here, very quickly, let's have a look at the dollar index, because of course all of this is related to the dollar index. And there's the dollar index today. We spiked up to that resistance level at 109, and we've got a lovely spike high there. Now if you look back across to the left, you'll see a few spiky bits here and there. There's one there, over there, that looked quite promising until we burst through it. But you don't see very many, actually, with a very significant spike high, particularly up through big round number at 109 and heading up towards 110. Often these very critical numbers we don't quite reach, so 110 might not even be reached, and that very close to, was it 109.30 or so? This was it, I think it was 109.28. Okay, so that might be the high that's in. I don't know. It's very dangerous to speculate that we might have a top in the dollar index, but everything else so far is looking pretty good when you look at the other major currencies. And if this does start to fall, then there's a great deal of hope for the dollar yen going back there. Dollar yen. We want the pound back on here. Come on, pound. Where are you? So there's a great deal of hope if that dollar index does top out there for these charts, all of these charts, and they're already looking like they're wanting to do something in any case before they start reversing. So look at the NASDAQ go. These charts are live, so I'm doing this during live trading. NASDAQ's looking fantastic. So perhaps even tomorrow, we won't have a free fall Friday. We'll have a really good trading day tomorrow, and we will push up towards 12,500, 12,900. Gold, well, yeah, it's bounced. That's really good for my current positions, but I actually wanted to buy some more a little bit further down, and I wanted to get in at 1685. I'm not sure if we'll get there, but overall, generally, actually, it's looking quite good, and I'm rather pleased with the way the markets are panning out. The Aussies, the Australian dollar. Well, this was a perfect trade. These are exactly the levels that I called out to people on Twitter and perhaps even on YouTube. I can't remember, but certainly on Twitter, and definitely to the members that I send out a daily report to every day. I said that level right there at 0.6685. That's where we should be buying and focusing upon putting most of our position in there. We did get some small positions long, a little higher up, but I said this is where we should be putting our money where our mouth is, and that was at 66.85. Well, today we dropped down to 66.85, touched it beautifully, got limited into the trade, and now we're 100 pips up. So fantastic. I'm really pleased with that one. Technically, this is probably the most obvious and the best looking of all of these trades. In any case, if I look at the weekly chart on this, you can see why I need not say anymore. Major support, very long-term support going back years and years and years, and a beautiful pattern here overall. Whether this will continue to hold or not, I don't know, but it should do at least for some sort of short-term rally, and that is the Australian dollar against the US dollar. Let's turn this back to the day chart, and where are we now? I want the pound back here. I keep on getting rid of my pound. So that was a perfect trade, and I'm very, very happy with that. Now, the only thing that remains left to talk about very quickly is Bitcoin. I'm going to get rid of the pound again. Bitcoin's looking good. All right, where are you, Bitcoin? I haven't talked about the S&P index. I'm not going to talk about the day. I'm not going to talk about oil. Let's just flash those charts up. There's oil, perhaps a spike through there. Yeah, if you want to be buying oil, I don't know. I think it's any person's guess. We've broken through major support, but broken back up above it again against that 200-day moving average. I don't know. It's just not. I think it's going to be too difficult to trade. Natural gas, I wanted to get long on a little bit below here. You can see actually right there on the chart, that little triangle there. That's my price alert warning where I wanted to buy. Didn't get in there, but it was the right idea. We didn't get low enough. And I don't think there's anything else to really talk about here. Yeah, so for those of you who are trading, I've been in and out of trading these pairs against the South African Rand. That's the US dollar Rand. We're up at 17.2 at the moment. That's pretty high. I was buying little bits down here. Didn't put much emphasis on that, but British pound, South African Rand, I was buying on the break of that trend line right there. I got into a beautiful long position all the way up to 20 and got out of there, and I'm just waiting. I should have actually bought on this bit of a dip back down again to the trend line, but I didn't. I wasn't watching it. I've been focusing too much attention on the majors. So that was a really good trade. So that's it. Nothing else to really say. I think you can't get long on this anymore if you are trading the Rand against the pound and the dollar. It's too late now. So perhaps we'll come back down into these moving averages. Any dips really are a good opportunity to buy the majors and sell the South African Rand. All right, and now let's have a look at what everyone's been waiting for. Not really, but this is quite an interesting chart. As you might know, I'm into Bitcoin in a significant sort of way. My average price is at 20,300. So actually for the first time in quite a lot of number of days, apart from a few days last week, we're back above there. So I'm in the profit on Bitcoin. That green line there is my average price. And looks like we've got a nice triple bottom here. I don't know. For me, any dip, I'm not day trading this at all. Any dip into lower pricing is good for me. I'm willing to buy on dips down to, this is where we are at the moment, that's long-term resistance and support now. Still holding there surprisingly pretty well. Bitcoin's doing the best, I think, out of most of the cryptos. Some of the others are languishing a bit. Some of them are still down for the day today. But there's more support further down at around 14,000. I'm prepared to buy all the way down to there and even down to the lower support, and that's at around 10,000. So I'm prepared to just keep on buying Bitcoin. I just buy it when the price is lower. I buy it and I hold it, and I don't day trade it. But for those of you who are day trading, well, actually, it's not a bad. I was going to call it an instrument, but it's not a bad. Let's call it an instrument. Not a bad instrument to day trade. There are some quite good moves and opportunities, but you've got to be nimble. I did do a little bit of day trading on it, but not really with any serious money. So that's Bitcoin, and looking good for me. That's just, I look at it once a day and see what's going on, and I don't have to do anything with it. All right, let's need to take a breath. So that's that. So looking at all of these charts in sync with each other, Nasdaq looking really good. Gold just holding. It's not convincing, but if we do get a dip down to 1,685, even better. That's where my main position is, but I've got a little bit in at the moment. Euro yen look to sell up into those fibs or dips lower. That's basically not going to happen tomorrow anyway. I don't think. Dollar yen, well, this is the stubborn one, ever stubborn. But if you have a look at this chart on the no, not that one. If you have a look at this chart on the dollar yen and you consider what's going on with the dollar index, we did get a spike up on here up to one. I had a sell order actually at 139.50, and we got to something like 139.42 or 41, and I just missed my sell order. It's not convincing at all, but considering what's going on with the other currencies and the dollar index, and rumors of intervention by the Bank of Japan, this could be possibly a top. I don't know. In fact, I would say probably not. We might get up to 140. We might get up to 141, somewhere around there. But with a bit of luck, we'll hold. Look at the divergence on the RSI, still looking incredibly at odds with the price action. So we've got this very dramatically rising. Why has that gone weird? Reset the price. So we've got this very dramatically rising price, but a fairly dramatically falling RSI at the same time. So that's classic divergence. Doesn't mean anything apart from that it's divergence. Doesn't mean it's going to fall down from here or do anything weird or exciting. But it is something just to keep in the back of your mind. Divergences can be important only because I think traders look for them and use them as an indicator of something interesting that might happen. In other words, a reversal. But bear in mind, they're just a lagging indicator. What they do show you, however, very clearly, is that momentum for this upward move is running out. So we're not seeing the RSI remaining at these highs. The RSI is dropping as the price is rising. And all that means is that the upward momentum, the rate of climb is beginning to slow down. Doesn't mean it's going to not speed up again tomorrow. Who knows? It's got nothing to do with predicting the future. It just simply says it is slowing down. All right, so that's all the currencies. And that's NASDAQ, gold, the cross, euro, yen, and Bitcoin. So good luck for your trading. I just wanted to get that out there for those of you who are not sure what's going on. Follow me on Twitter because I do post there daily, and I often post interesting thoughts. There goes the euro yen, as you can see, just while we're talking. So that's why I showed you on the hourly chart. We've just broken through all those moving averages and it's moving higher. So we don't want to be selling right now, but we do want to consider selling as we move up into these fib levels, and particularly that one there. For those of you who do trade euro yen, and I know it's quite a number of people, this one here is interesting where we are actually right now. but I think that there's room to go a little higher. This one is the most interesting to me, the 61.8% Fibonacci. It's major previous support, which will now become resistance. You can see it was support on 3 occasions. It was resistance on 2 occasions. It's also near this 20-day moving average. So that area there, 141 to 141.50, pretty key. And in fact, if we do get to 141.50, and it's a price magnet, so I need to make a video on price magnets. Price magnets are so important. Price magnets accelerate the price as the price approaches them. So if this is moving up towards the price magnet, as it gets closer and closer to this price magnet at this fib level, previous support, moving average, all that sort of thing, as it gets there, it will start to accelerate as you get closer and closer to the price magnet, and then touch it, and then at least react downwards again. Even if it's just for a brief period, it will do that. So that's why price magnets are so important. And if you can learn how to trade price magnets, well, just leave me a comment in the whatever it is, comments section below if you're interested in me doing a video on price magnets, because I think they are the most interesting and key features of trading, and I use them every single day when I'm day trading the markets. Most of the time I'm in slightly longer term trades, but when I day trade, which is normally at the opening of the European and the New York session, I use solely price magnets, levels on the chart as price magnets, and I trade off those for quick scalps, you might call them, for small amounts of pips. Once you've got that skill down, it's fantastic. I mean, there's a very, very high percentage winning rate, and it's so simple to use and to understand. All right, so that's that. Okay, I said it would be 10 minutes, probably been 20. I don't know, I haven't counted. But anyway, good luck for tomorrow, and I'll see you on Sunday for my weekly update.